Hey, this is Andrew Kuhn, and you're listening to the Focus Compounding Podcast, the podcast where Geoff and I talk about actionable stock ideas, timeless investing concepts, and the overall way that we think about investing at Focus Compounding Capital Management. Go to focuscompounding.com and enter in your email to get a free watch list from Geoff every other week. And be sure to check out all of our other work where Geoff writes about stocks at focuscompounding.com. I upload how-to investing videos on YouTube, and we both manage capital for investors at Focus Compounding Capital Management. Thanks for listening, and be sure to subscribe to follow along. Welcome. How's everybody doing? Hope you are doing well. My name is Andrew Kuhn, back here again today on the number one value investing podcast in the world, sitting next to my co-founder, Geoff Gannon. Geoff, how's it going today?
It's going very well, Andrew. How is it going with you?
It is going great. We hope it's going great for everybody else as well. Hey, if this is the first time that you are checking in with us, be sure to check out all of our work. Go to focuscompounding.com. If you like free stuff, sign up for the Gannon Gazette. We sent one out this past week. What was our open rate? It was, I think, north of 60%. I think it was like 70%. So I was happy to see that. But if you are on the list and you did not see that, check your spam folder. We should not end up in spam. And if we did end up in spam, let me know. But if you want to get on that for future lists, go to Focus Compounding and enter in your email for the famous Gannon Gazette. If you want to get access to all of our research, sign up and use the podcast promo code, which is podcast. It'll take some money off of the subscription price, and definitely as long as you do stay a member. If you're watching us on YouTube, hey man, we're trying to pump out a ton of content over here. Hit that thumbs up button, hit the subscribe button. We are doing interactive podcasts going forward. A lot of people like it. I don't know why we haven't been doing it. We are innovating and we are educating. And if you want to support us, hit that subscribe button. And we're trying to hack that YouTube algorithm. Leave us a comment. I love to see what everybody is saying. And really, because everyone says good things, I probably won't like that as soon as somebody doesn't say something good. We're coming up on our 2-year anniversary. What's today's date that we're recording this? Today's date is February 7th. Our 2-year anniversary is February 22nd, which is crazy and also incredible. And it's been a lot of fun, and we're not going to stop. I can't wait till we get up to our 4-year anniversary 2 years from now and see where we're at there. So I want to thank everybody so much for following along. It's been a lot of fun. Follow me on Twitter at Focused Compound. So today's podcast, I don't even know what we're going to talk about. We're going to talk about how we find ideas, I guess. This is going to have zero structure whatsoever. So if you want to follow along on how we find ideas, go to YouTube because we're recording the screen and we're just going to kind of go through the process. I think sometimes good ideas, they just like jump out at you. Mm-hmm. Would you agree with that?
Yeah.
I mean, I would say there's, you do have traditional routes of finding ideas, like going through, maybe looking at other investors, 13Fs or blogs, Value Investors Club, Corner Berkshire, Twitter, etc. But sometimes just good ideas they just pop out at you. And then you're like, wow, this seems actually kind of interesting. And then you start to do more research on it, and then it becomes really interesting. But let's just go through the process of like your everyday process, where you set up the potential for good ideas to jump out at you. And if you're watching on the screen, we're on Netvibes.com. I don't know why it's kind of skewed right here, but this is pretty much just a blog roll that Geoff has had for some time now, right? And what's going on here? See, this is what's going on here.
Go to the news tab.
Yeah, but why is this like? Oh, there we go.
Because that's the overflow tab.
Got it. So news tab.
After you have like 50 blogs or something, I think you have to start another tab.
All right, cool. So this is what both Geoff and myself use. I use Geoff's login, and every time I do log in, it's always, if there's a thing that has not been read, it will, you'll obviously be able to see, but it's always already read. So I'm just like, okay, well, did I read this? I don't know.
You should probably have your own.
Yeah, I probably should, right? But these are just blogs that Geoff likes to follow. I'm sure you recognize a lot of these names, a lot of people from Twitter, a lot of people that have just been blogging for a very long time. But we like to stay up to date on what other people are blogging about, especially other investors that may invest very similar to the way that we invest, right? No-name stocks. I mean, that's exactly what we do. But we do come here every single day. OTC Adventures, right? Shout out Dave Waters.
Yeah.
But we come here every single day just because we like to see what other people are writing about, other ideas, even if we don't invest very similar,
Right. Yeah, so I read that every single day. Let's see. I also I check email for ideas from people because I get ideas from talking to people by email. Get ideas from talking to some people by Skype. So check those every single day. Check the blogs, which I do through Netvibes. I'll read Value Investors Club every single day. Corner Berkshire and Fairfax every single day. What else?
Check Twitter.
I do not check Twitter. You check Twitter.
I don't believe you. I'm convinced Geoff has a Twitter. He has an anonymous Twitter because he seems to know everything that happens on Twitter.
Yeah. So and then you sometimes get ideas from them that way. I think I said something once that I think some people interpret as being like critical of Corner, Berkshire, and Fairfax, for instance, where I said that in all the time reading I got one idea.
Yeah.
I actually meant that to be positive. That there was one stock that we own that I bought for something that I never would have found if it wasn't for Corner, Berkshire, and Fairfax. Now, there's many stocks I've read about on that site that
should we go to Corner, Berkshire?
That I got more information from, but I would have known about. You know, there's not that many stocks that I would never have heard of. There was one that I actually bought that I never would have found.
So when you come across an idea and it has like 40 tabs, do you go back to the beginning? Or do you just kind of start and go work your way backwards?
If I know what the company is, I go check the most recent one first.
Yeah.
If I don't have a good idea of what the company is, I read the first one. So things that are like warrants and stuff, I definitely read the first one because I need someone to explain like what Weatherford International warrants are. So like there's GraphTech. We talked about GraphTech. It was written up on our site, things like that. So Corner, Berkshire, and Fairfax, the thing is, of course, for me at least, I find that the very shortest threads are the most useful. Mm-hmm. So the super long threads tend to just be controversial things, right?
And people just like,
so like something happened at a discussion.
Yeah.
Whereas the ones that I like are the ones where someone said something and like no one paid attention to what they said.
Sure.
Those tend to be the one, like the one-page ones and stuff. Those are the ones that really excite me. Like, I mean, people know we own NACO. There was a NACO thread, I think, before we bought it or something. It was very short.
I always love when I see a new like thread of a company and they're like, oh, Geoff Gannon wrote a long post on this a couple years ago or something like that.
I've never read those threads because if I find my name online, I stop reading whatever it is.
Yeah, same here.
So Village
as soon as I see Focus Compounding or Andrew Kuhn or Geoff Gannon, Geoff Gannon I may look, but as soon as I see my name, I just click off. Good. Because I
suggested that's a good thing to do.
Yeah,
it
is a good thing.
Back when I was writing for a site and stuff, and people asked, why don't you? They were like, oh, there's all this stuff in the comments. I was like, I don't read the comments.
Yeah. There's a pro tip to anybody that creates content online. I check the YouTube comments though, or like the podcast.
There are some things that are useful. People do give very useful things
feedback.
about feedback, especially about like technical things and stuff like that.
Yeah.
That's useful for their experience for it. The stock stuff, I mean, I read the comments of other people's blogs about it, looking for things that someone might know the stock and things like that. To be honest, we get way better information from people by giving out our email addresses and people contacting us by email. That's always a better way than people talking in comments.
Yeah.
That's just the way it works. Same, I think, with Twitter or something, that people talking through Twitter in a way that everyone can see might be less useful than stuff where they're messaging you directly.
Yeah, for sure. What about Value Investors Club? We use Value Investors Club. Do you read everything? So I have it, I think...
You're registered for it.
Yeah.
I'm not. I don't generally register for sites because I don't like my name being associated sometimes. There's been things where someone's contacted me because they realize that I'm on their site. I don't think Value Investors Club would do that, but some other things have done that. So
I have it skewed to like being like 0 to $1 billion.
Okay, so I just do all the A to Z stuff to go through it, but then I also just do all of the latest.
I'm going to take one of your write-ups from Focus Compounding. I'm just going to continue just to apply and apply.
I think I said once that I applied for an idea.
Yeah.
Of what they are.
Yeah, and you didn't get approved, and you said the idea like went from like grew, it was like 4 times or something.
The idea weirdly worked out incredibly well because it was to short one thing, go long the other thing. The long worked out incredibly well, and the short went to 0.
That's like totally something that Value Investors Club would like.
I know, that's why I did it. It wasn't my favorite idea. I didn't put the trade on personally that way, but I just figured that's the kind of thing they would like.
Yeah.
But no. So
come on now.
I think I mentioned before, it was one company was transitioning into an ethanol company, and another company already had the name ethanol in it. So I said short the thing that has ethanol in the name and buy the thing that is going to become an ethanol company.
Yeah.
Right. Yeah.
See, you're up to date because Tandy, you could see that I was on there because this past weekend Geoff asked me to copy and paste this article to him.
Tells you that I'm not registered there to read that because I said send me the Tandy thing. Yeah.
It was It was kind of long.
I noticed that in Corner, Berkshire, and Fairfax, they mentioned that there was a write-up of it on there, and
they were complaining about how long it was too.
It's not that long.
Yeah,
it's fine.
Yeah,
but yes, Value Investors Club tends to have pretty short write-ups.
So for spinoffs, why don't we jump into? So we went through a couple blogs that we use. So we have a blog role, I guess you could say, where you just have a bunch of them together.
Yeah, maybe we should talk about some of the specific ones that are really good that way
for blogs.
Yeah. Okay. So there are a couple that are very, very good for ideas for people listening to this to find. They aren't always the same as what we do. I'm not saying they're the best blogs that there are. Some of them are some of the best blogs there are. there are other blogs that do great, like more general content. So probably the number one best that everyone should read is Clark Street Value.
Yeah, we got that all
the very bottom down here. But it's just very good because it does write-ups of specific special situations and things like that. Often we might pass on them or whatever, but I know that I mentioned that what alerted me to the fact the NACO thing was really going through and got me interested in reading the 10K was a write-up on Clark Street Value. And it was fine. It was good. It wasn't...
Have you ever emailed with this guy before?
No.
I know he's from Chicago, Clark Street. That's Wrigleyville area. But no, we've definitely talked a lot about him, but I've never had any communication with him at all.
So so that's got to be one of the best blogs of all. And of course, with these blogs, what I do is I go back and read from the beginning because
especially Spinoffs.
Yeah, a lot of times, and I've said this before, we mentioned OTC Adventures, Oddball Stocks. I've read everything from the beginning on up, and I actually keep Excel files on them. So, like, just so people know, I actually do have an Excel file that has every stock that OTC Adventures ever covered from the beginning. Same thing with Oddball.
Dave's so flattered.
Clark Street. Because what will happen is they'll write something about it, and then they might not follow up with it. The stock price might go down a lot, something might change a lot, the business might get better, some of them get covered forever. So, like, right there, you can see Conrad Industries, for instance, right? Monarch Cement.
Yeah.
Those are names that I've known for 10 years, and I've been covered in some blogs for 10 years. Conrad Industries made a ton of money one year, a long time ago, and they make nothing now. So you could just see from the stock price how varied that is.
Yeah.
So that's another one that's really good. There are a few...
Oddball Stocks is great.
Yeah. There are a couple that are non-US ones that I focus on that I mentioned to you because they get less coverage that way. So no-name stocks obviously is very, very small stocks. Elementary Value is another one that's very, very small stocks. But I also there's some that I like. Value and Opportunity mostly just does links and stuff now. It does a little less write-ups of specific companies. But what'll tend to happen is that Value and Opportunity will be more European ones, right? So German specifically, but just in general, more European.
UK-based value.
And I believe Value and Opportunity linked to something that was a Belgian stock blog, and I've been reading that one too now.
And a good way, seriously, to find other blogs is most blogs do have like their own little blog rule where you can, if this guy. His name is Elementary Value, right, David? But he invests in similar stuff to what we invest in. And if he follows other blogs, that's a great way to find other people that could be in the same wheelhouse that you're in. Yeah.
And so the ones that I really like tend to be the ones that write off specific stocks and that have some particular focus. A lot of times it's, this one we know well. Because it covers a bunch of things that
were written up on Focus Compounding.
They're excellent write-ups here. So if you go to this one, they can see on the screen what the name of it is.
NATOsnotes.com.
But so .blogspot.com.
Yep.
So they do write up a bunch of stocks that have been done on Focus Compounding or were done by this author on Focus Compounding or been talked about in some way on Focus Compounding or whatever.
We always say,
and other ones that haven't been too. But they fall in that sort of category.
Yep.
They're excellent write-ups. Some of them are very interesting, very obscure stocks. That they go into a lot of detail with.
Yeah, I would agree. Okay, so why don't we go to Spinoffs, right? Okay. So we use this website. So what I do is I have a list of past and upcoming spinoffs for Geoff to work off of, and I usually come to this website because I've found that this one is the best one that kind of groups it all together.
Just in terms of the actual table.
Yeah, So stockspinoffinvesting.com.
The first one there, by the way, is one that we talked about a little bit in Clark Street.
Yeah, that's right. You just wrote up. This guy, I'm sure you recognize. If you're on FinTwit, you probably recognize his picture. I don't have his Twitter right here. Spinoff Investing. There you go. So he's a good guy to follow, and definitely check out his website. But Spinoff Investing, we're not even members to the website, but the spinoff calendar is like incredible, I think. So that's what we use. But they have upcoming spinoffs and completed spinoffs. And what's cool about spinoffs, I think, is that the completed ones are just as good of a hunting ground as the upcoming ones. Probably even better, quite honestly. Because sometimes even Joel Greenblatt wrote about in Stock Market Genius how I think he said the average, and this was, whatever it was, 15, 20 years ago, that the most spinoffs outperform after year one.
Yeah.
So it's good to, and look, he gives the price return since the spinoff. So if you see one that's down or flat or just whatever, I think it's a good hunting ground to, take a deeper dive and learn a little bit more about it.
Yeah, and it's a good list to look at.
Yeah.
And definitely things to read about from that. I mean, we did a podcast where we talked a little bit about spinoffs and how, in general, I found that spinoffs lately haven't been as interesting. And I would still say that's true, but I still look at them and we still consider them. We've bought things that were spinoffs. I just mean as a group, they're not as kind of overlooked as they used to be, I think. And a lot more companies, I think, are getting wise to the fact that they can load them up with debt and stuff like that. They're kind of pretty popular with certain value.
Otis Elevator Company. We've talked a lot about elevators lately.
We have,
personally.
yeah.
It's a great business.
Yeah, and I was going to write up a elevator company, decided not to because it turned out that it was significantly less good than the other elevator companies. It was a Japanese one, but there are a couple in Europe and in the U.S. that are good. I noticed it would be one of those.
Got it. So, spinoffs. Clark Street Valley is great for like spinoffs in special situations. Other blogs. Your email. Should we go through your email? I'm just kidding.
Yeah.
What other are other good ways of just having ideas jump out at you?
So
I think a great way, seriously, is like what you said, what you have done with OTC Adventures, how you've read every single blog, even after, years after they were put up, because it's a good way to find out about, isn't that how you found out about CSVI?
Yeah. So, honestly, I would say in general, it hasn't mattered that much to me how recent the write-up is. Now, there's somewhere that might not be the case. Some stocks are like incredibly cheap, and then it's they go up a lot, and so you miss out on something. But I found many situations where something that's a year old, a couple years old, can still be interesting.
All right. So what are our other sources of ideas? So we screen for ideas. We use Portfolio 123.
Right. Yeah,
which is a good source.
Yeah, honestly, for me, a huge part of it is talking to people about it who know what kind of stocks I'm interested in. If we talk about something on podcasts, we tend to get responses from people sharing information that they have about it, trying to get more information from us about that stock. Like they'll say, "Oh, I heard you talk about it on the, like when we do the quick FS stuff, when we do our snap judgments, that kind of thing." And then,
that's the best part about putting out content is people, they come up to you and they're like, this is a good, here's my research on this company. Right. What about, have you ever read a book and they talk about a stock in the book and you're just kind of curious?
Yes.
And then you go and look it up and then you find a bunch of, or like a good investment idea from that book.
Yeah, in fact, I found one. I found more than one, and again, kept an Excel file on it. One of my favorite books of all time is Hidden Champions.
Yeah.
Or Hidden Champions of the 21st Century, or whatever the re-release, updated version is. But I did find from that a cork company, a company that makes cork, like for wine stoppers and that sort of thing.
Nice.
And did not buy it, and should have.
What was the company called?
Got very cheap. It is Amorim, AMOR. It's not going to be on there.
No.
But you could find it on let's see, you could find it on
OTC Markets?
No, I don't think it trades anywhere but in Portugal. I could be wrong. You can find it on Bloomberg, but I don't know how far their chart will go back. But yeah, so when Portugal there was some concern about them, they talked about the pigs, right? So Portugal, Ireland, Italy,
How do you spell
Greece,
it again?
Spain.
What's it called?
AMORIM. So it'll be there, that one, that first one. So
Pulling up the terminal.
So we don't want to. I don't want to see that price.
Why? What price?
I don't know. It's probably up 10 times or something since where I could have bought it.
Good job. Did you actually look at it very closely?
Oh yeah, very, very closely. Honestly, the only reason I didn't buy it is because it had a significant amount of debt, and then it had the problem of what the debt was denominated in euros, and what it would earn in, and what its expenses were in, and things like that. There were a couple things in that time period that I probably should have bought that I would have if they didn't have a lot of debt. And so you can overweight the importance of debt that way. The company hasn't always been a great business. It's always been a leader in its field, but it hasn't always had high returns on equity or something like that. But yeah, I don't know. It certainly was.
But you found it just from kind of.
It was
reading.
way under 2.
That's what I'm saying, right? Sometimes good ideas, they just jump out at you, right?
Yeah.
You're just reading the book and you had the curiosity to actually go and look at it.
I recognize the name of the company because I'd read the book so many times. And did plenty of research on it, actually, to be honest. I'd seen plenty of videos about it and did a lot more research into the industry and stuff, yeah. So pretty in-depth research on that and didn't buy it. That's one of the few that happened with.
It's probably an overlooked stock, too.
It was.
Yeah.
I don't know if it is now, but it was then. Yeah. I mean, Portugal in general is a pretty overlooked market.
Okay, so let's say
It was microcap at the time. If you look at the market cap, it was clearly microcap when I bought it.
So grouping together a bunch of different blogs of people that you respect, may invest very similar to you, that's a good source. For spinoffs, I would just say that website that we use is probably one of the best. Stockspinoffinvesting.com.
There are others that try to do the same thing, but we've found that
totally
useful.
Twitter is great. Your email. So just from, again, and this is another benefit of putting content out there on the internet, because people reciprocate and bring you their research and stuff like that. I can't tell you how many ideas that we've talked about on QuickFS, and then we'll just get a very long email of, hey guys, here's my research on the company. That's always very helpful.
And I get tons of ones that are just people who bring me ideas I don't know. They're just interested in what my thoughts are on something that they own or that they're thinking about buying. I've never heard of it. Screening.
We screen at Portfolio 123, and we have other ones as well. What else?
That's pretty good.
And then some of them, they just kind of jump out. Like you said, it's Munger was talking about how he read Barron's for 40 years.
Yeah.
And then he invested in one idea. I think he said he put like 10 million. I know I'm going to butcher it. He put like 10 million and it went to it just grew like crazy. And then he gave the rest to Lailu, and it's now like worth like whatever, 600 million.
Yeah, I guess the most important thing is keeping track of the names.
Following up.
Yeah. What I found to be very useful now, we focus on very obscure stocks, but I found this to be useful just in general. A very passing mention of something that sounds kind of interesting, and then the author moves on in like a couple sentences, is often just as interesting as a big write-up that they do, because then you can go and find out more about it yourself. So they'll be like, oh, and here are their peers, and I didn't like this one because it has too much debt, or I didn't like this one because it's a newer company, or I didn't like the management, or I thought the PE was too high, or whatever. Like, write that down and remember it for later.
How much do you ever have like alerts? I know some investors like that do special situations. They'll have alerts, or like Google alerts for like S1 filings, or certain corporate events, stuff like that.
I did do that a long time ago, only for when I participated in certain transactions. I basically certain arbitrage type things I did, and so that was the only time that I did it.
Yeah,
and it was just to see everything that I came across that had certain words in it.
Got it.
So yeah, so certain things like odd lot tender, and some stuff like that. Yeah.
Anything else? Any other ways to find ideas?
No, I think those are all good ones. I would stress, like when you find a blog or Corner Berkshire Fairfax, anything that you like the ideas, go look as far back as possible. Don't just look at the recent ones, and like keep a log of all the things that might be interesting to revisit them. Because sometimes you'll find that stock is like down 50% since it was written up, or it's the same that it was, it's just as attractive now as it was years ago.
Yeah.
Don't overweight just the stuff that's being written up now.
Agreed. Well, I want to thank everybody so much for tuning in with Geoff and myself on the #1 value investing podcast in the world. If this is the first time that you are tuning in with us, be sure to check out all of our work. Best place to get all of our content is my Twitter, @FocusedCompound. On Twitter. Check out our website, FocusedCompounding.com. If you do sign up, use the podcast promo code, which is podcast. I want to thank everybody so much for tuning in. Be sure to hit that subscribe button, thumbs this video up, and we will see you in the next podcast. Hey, this is Andrew Kuhn, and that was the Focused Compounding Podcast, the podcast where Geoff and I talk about actionable stock ideas, investing concepts, and the overall way that we think about investing at Focused Compounding Capital Management. Go to FocusedCompounding.com and enter in your email to get a free watch list from Geoff every other week. And be sure to check out all of our other work where Geoff writes about stocks at FocusedCompounding.com. I upload how-to investing videos on YouTube, and we both manage capital for investors at Focused Compounding Capital Management. Thanks for listening, and be sure to subscribe to follow along.